Yes, it's Nvidia that Stanley Druckenmiller is trimming his position in. And as Altimeter's Brad Gerstner points out, it's one of the handful of tech stocks that saw big gains last year, but shares are currently 7% below their 52-week high. And while Nvidia has firmly held the lead in the AI arms race, there's a lot of new players emerging. Microsoft announced today, with Biden in attendance, by the way, that they would invest $3 billion to build AI out in Wisconsin. Apple debuted 2 new iPads that will back AI programs. And once under the radar, Supermicro became a near $50 billion company thanks to its strong sales of its AI-powered servers. But even as the competition heats up, my next guest says Nvidia's moat is still so big and it's only going to get bigger over the next decade. He's got a buy rating on the stock, $1,200 price target. I think he's had it since 20. He's got 33% more upside from here. Let's bring in CJ Muse. He's a senior managing director at Cantor Fitzgerald covering the semi space. CJ, welcome. A pleasure to chat with you. Did I get that right about your bullishness all along the way here?
Yeah, you did. Thank you, Kelly, for having me.
So what did you identify way back when that, about Nvidia's potential that makes you still so bullish on its upside now?
Yeah, I can't say way back then that I saw this coming, but sure. As we sit here today, I think that Jensen and crew, have really created both the hardware and software and complete solution that has put them in the pole position. And they're moving to an annual cadence for new offerings will only enhance their competitive advantage. I love to hear the skepticism. I love that there's great debate that they might have an air pocket before the launch of their new Blackwell solution. And quite frankly, I think that therein lies the opportunity. I think there is a worry that there could be this potential for an air pocket, and we don't see that at all. We've definitely seen lead times pull back in the sense that you can now actually find GPUs, but in no way does that mean that we're in excess supply. And I think that whether it's hyperscalers, enterprise, and sovereigns, I think that they're going to drive excellent demand for AI, into 25 and 26.
Yeah, you're not ruling out a pullback, but you're basically saying people should jump in with both hands. Let's talk brass tacks if we could, and talk about the PE multiple, the earnings potential that you see over the remainder of this year, maybe into next year.
Sure. I think that for next year, the street's at $30. We've been talking about $35 plus. I think the buy side is underwriting a 35 to 40 type number, and if that's the case, then I think we easily get to our price target, and I think that will be the case.
What about people who look back, and I'm going to take this outside of the realm of kind of people in the semiconductor space, but traders and investors more broadly, and they go, well, we saw Tesla when it was $1 trillion. Wasn't a great time to buy it then.
Sure. I think that there is a realistic kind of thought process in terms of, how big can the market cap actually become. But, if the AI infrastructure market is truly going to grow into a $400 billion market, and given the leadership that we expect Nvidia will continue to have, then, the current market cap, is conservative in that world. And so if you believe in AI, and you believe in the investments that are required to support that, which we do, their market cap can clearly push higher.
How do you think about the different kind of macro factors here, what the Fed does or doesn't do with rates, whatever kind of slowdown might happen with the economy this year? How should we think about Nvidia kind of upside, downside in those scenarios?
Yeah, no, that's a great question. If I had to think about what I learned this earnings season at a very high level, it's really kind of secular continuing to win, whereas cyclical, if anything, downticked over the last 3 months. So, if you look at, housing or, some of the reports on the consumer front, clearly it's pointing to a slowdown in the economy into the second half of the year. And obviously, that is really, I think, the one risk for owning Nvidia. But, that said, I think the backdrop is for continued spending, kind of irrespective of what the Fed does or the consumer, because AI is so mission critical to every Fortune 2000 company that they have to invest. And so I just don't see the slowdown here. I think we can weather the storm in terms of Nvidia sales continuing to push higher and above consensus. And in that environment, if they're truly going to do kind of $35, the multiple today at 25 times is not, aggressive at all. And so I think, in any economic scenario, Nvidia will be a relative outperformer.
It's interesting how relatively low the multiple is compared with Tesla or even at Netflix at their peaks. $1,200 is your price target. You're overweight. CJ, thanks for joining us today. We appreciate it. CJ Muse with Cantor Fitzgerald. And